Hello and welcome back to another episode of the Investor Financing Podcast. We have another fantastic show. We're going to talk to a very experienced investor who got started in real estate not in 2020, but in 2008 when there was a lot of blood in the streets. And at that time, he was a former school teacher. He taught woodworking and shop, so he's very handy. Comes from a handy family, I believe. But then he realized he could probably cut his teeth in rehabbing houses. I heard that you did over like 800 houses, a crazy amount of houses.
No, not that many. Not that many.
It's a fishtail. Okay.
Yeah.
Let's just say 1,000. Okay.
Yeah.
Anyways, renovated a lot of houses, some apartments, mobile home parks, and he even did something with the ski resort in his past. He's a licensed GC, or was. I don't know if you still are, but licensed GC.
Yep.
He's the host of a podcast called Pillars of Wealth Creation, which is a bi-weekly podcast. He's stationed in Minnesota, so he has very cold winters.
Yep.
And has a little bit of a Minnesota accent, so it's good
to
have. Welcome to the show. Now we'll kind of give you a story here that really you got into real estate. You flipped a lot of houses. You used your handiness and got your general contractor's license, and you probably did pretty darn good in that. And at some point you said, wait, there's got to be a better way. And then you met your partners in Endurus Capital, and you guys formed this company. And then you just focused on multifamily since like 2019-20, and you guys scaled up and you have collectively about 4,000 units. Is that accurate in like 2 years?
Yeah.
3 years?
Yeah. Pretty. No, I mean, there's a lot of in between in there. So I started investing in multifamily. So you're right. I mean, so I was doing all the flipping, flipped a lot of houses, and also was buying 1 to 4 family rentals. And so I built up a decent sized 1 to 4 family rental portfolio. And flipping was just becoming, I don't know, just pain. I just wasn't excited to buy another house and flip it. And so I kind of looked at my returns on my flips, and I looked at my returns on my rentals and kind of projected these rentals as what the value is, and said, wow, these rentals are making so much more money and they provide me so much less head damage. I need to focus on that. So I started focusing on that. And as I was doing that, I started thinking, well, if I'm doing this with the duplex or single family home, well, maybe I should look at a 20-unit building or a 100-unit building. So that's kind of what I started doing. And so in 2015, I stopped flipping houses and I started buying apartment buildings. And I started buying 20-unit apartment buildings, 10-unit apartment buildings, 30-unit apartment buildings, that type of stuff. And I was actually having a conversation with a mentor, and we were talking about a mutual contact. And I said, I'd like to do what he's doing, buying these 100, 200 unit buildings. And he's like, why aren't you doing it right now? I'm like, well, I got to, work my way up. He's like, why? So we had this conversation. I'm like, yeah, you're right. Like, there's nothing holding me back. I've got all this experience. I'm very knowledgeable. I know what I'm doing. Like, why should I be just buying these 10, 20 unit buildings? And so probably within a month or two, I put a 84 unit building under contract, and then shortly thereafter put a 120 unit building under contract and started buying these apartment buildings. So that was in 2016. Started buying, 100 unit type apartment buildings and bigger. And so 2016, 2017, 2018, and then Endurus, we started partnering with each other in 2019, and have partnered ever since. And so we've grown considerably then from 2019 through today, and really have picked it up quite a bit. And it's been a huge benefit to have a couple partners and to really we've got very complementary skills to each other. So I think that's been a huge, we each can do the business and have done the business on our own, but together, it's myself and my business partner, Matt, and my business partner, Drew, and together, I'd say we really have the ability to go a lot bigger, a lot better, a lot faster.
So at what point did you guys realize that there was also an opportunity in senior housing? And then what did your first project look like with that?
Yeah, so senior housing started buying that in 2020, right during the COVID pandemic, and that was honestly the opportunity. Looked at that and went, "Wow, rents are uh, not rent. Sorry, occupancy is going down. Right, people are hurting. Nobody's moving into these buildings. People are scared of them. That must mean there's opportunity." And so we started looking at those buildings and found that there was a sizable amount of opportunity. Cap rates had really decompressed, right? So we're able to buy these buildings at 9 to 12 cap on actual day one numbers, and we're able to buy them with occupancy issues, and so we do have upside in growing occupancy and quite frankly rent. Rent increases just because people don't keep up with the market. There's not as big of rent increases as multifamily. It's not like, where multifamily over the last couple of years has gone up just crazy rates, 12 to 25, 30%, where senior housing goes up, 2 to 5% every year. But if the owners, the operators don't raise those 2 to 5%, you can see they get behind pretty quick. So that's kind of the upside there. And honestly, the biggest upside is just what's coming down into the future here. And so today, the 300,000 people will turn 80 years old this year, 2022. 300,000 people in 2022. In 2027, you'll have over 1 million people turning 80 years old. And that's our client, 80 plus year old people who need some sort of assistance.
That's very cool. So do you outsource the operations of the assisted living, or did you build your own management team for that?
Yeah. So we started out doing it in-house and then realized that we should not be doing this in-house. We should be hiring this out. And so I'd say we actually have done very well in-house, but if we want to grow our portfolio, we have to focus on one or the other. And so we decided we're going to focus on growing, and so we now hire third-party property management. We still do manage in-house a small portion of our portfolio because we've got great teams. We've got a great regional director. Just everything's in place for that. But as far as any expansion right now, it goes to a third-party property manager, which is really similar to third-party multifamily manager or anything commercial real estate. Acts pretty much the same. They hire everybody. They manage the day-to-day, all that kind of stuff, and we pay them a fee-based management, fee-based.
So what is your take? What does your crystal ball say with what's going on? We're starting to see in the residential world, we're seeing definitely a slowdown.
Yeah.
We're seeing inventory levels creep up a little bit. And what are you guys talking about internally? Do you think there's going to be a pivot at all, or do you think it's pretty much business as usual? This is going to be
great questions.
Short-lived.
Yeah, and of course, I don't have a crystal ball, right? Great question, but I like how you pose that. What are you talking internally, right? Because we're just like anybody else. Everything we look at is predictions based on data, and data is limited, and quite frankly, data is real time. It's not. Actually, even data in multifamily is actually backwards quite a ways, because like the properties that are selling today were under contract 90 days ago. And so you're seeing those properties. So that's 90 days old, right? That's not today. And so we're having a lot of conversations with brokers, a lot of conversation with mortgage lenders. We're having a lot of conversation with other investors. I was at a conference this last weekend talking with a lot of investors. And so we're already seeing in multifamily in particular, we're already seeing a 10 to 15% kind of price reduction over the broker whisper price, right? So the brokers will say, hey, this property is going to sell for 60 million, and you're going to see you're going to expect 10 to 15% under that. The other thing that we're seeing a lot is retrading happening. Retrading was a naughty word over the last 10 years. You did not retrade, otherwise you got a bad reputation, and then eventually you just don't get deals. Now, retrading's happening again. People are saying, hey, we can't buy for this price because our financing is X amount, and we can't swing it. So we're either going to walk away from the deal, or this is our new price. And so we're seeing both of that happening. We're seeing things like you used to see. You put a deal under contract and you put $500,000 hard day one, earnest money. We walk away from this deal, you get our $500,000. That's gone away for the most part. So we're seeing that going away, starting to see even potentially some financing contingencies coming into place. This is multifamily, 100 plus unit multifamily. I don't know what's going on in the single family world other than I hear some stuff, but I don't have firsthand experience with it. As far as senior housing, we haven't seen any change. The market was soft. We were buying stuff for 70 cents. We were buying some stuff for 50 cents on the dollar, and we still are. So not much has changed there as far as pricing goes. But multifamily, people are. The other thing too is I've noticed a lot. Like before, you could buy by the pound, right? So you would buy an apartment for $100,000 a door, but that might be a 1 cap or maybe even a 0 cap. But if you've got a great plan to fix it up and renovate and do all that, you could get it financed. Now, that's not as much the case. You're going to have a really tough time getting something like that financed. So you're going to have to be buying based on performance. And so buying based on current cap rates is much more important right now. Buy it at the 5 cap or the 4.5 or whatever it is in that market.
Very interesting. Yeah, as far as the residential, what I'm seeing that like the iBuyers have pulled back. All these that were buying the single family, like 3 of the major ones aren't buying right now nationally. So that's a sign to me that everybody's cautious. People are still. I was just on a call last night with a lot of successful people, and they said, just don't look for deals. Like buy only really good deals right now.
Yeah.
There's no reason to be speculating, and also. In the multifamily world, my question is all these people that, like it appeared that they overpaid in the last couple of years on some of their assets, and they went into bridge debt because they were going to do some value added, and they were underwriting with like a 4% or 3% rate. Now it's going to be 5.5%.
Yeah.
I think there's going to be a little bit of opportunities. I do think this time around we'll see some opportunities. I was around in 2008 as well, like you. Unfortunately, I was on the other side getting beat, but
getting clobbered.
Yeah, but I don't think we'll have a 2008. But it just, to me, it's been unbelievable to see just what people. I had a friend buy an apartment building in Texas, and I think he bought it like a year and a half ago for $36 million. He said he's selling it for like $62 million.
Wow.
And he didn't really have to even implement a huge
Didn't
value
do
add.
anything.
Yeah, like, and to me, that's just like, wait, something's like doesn't make sense.
Yeah, and that's what's happened. That's what happened with multifamily. It just was really strange, and so that's why 10 to 15% price reduction. We probably need to see another 10 to 15% price reduction still for these deals to get back down to earth, quite frankly, because like you said, like this, you buy it for 30 million, you sell it for 60 million just a couple of years later. I mean, you didn't do anything. That just doesn't make sense. It just doesn't compute. And so we're actually talking, we've been having some conversations with private equity firms. As we look to expand, we're looking for different options for equity for our deals. We raise all our capital, but you only have certain bandwidth. And so anyways, we're talking with a couple of private equity firms, and they were talking about what they're looking at is they're looking at a deal and saying, well, if this deal traded for, 50 million, you're buying it for 100 million, we're out. We're not looking at those deals. We can't figure out why you're buying it for so much, even if you think you've got some sort of value opportunity and you can make the numbers look right. We just don't feel comfortable with that big of a size gap. So they're being cautious. That's the iBuyer that you're talking about. They're kind of going, wait a second, we're just going to kind of pencils down for now. We're going to see what's going on with this market, and then we'll get back in. Now, what does that do for you as the more retail buyer? I think that provides some amazing opportunity. Now, you might not see 50% discounts like we saw in 2008 or 70% discounts like 2008. But, look, if you can if you can take advantage of these institutional buyers walking away and pencils down for a little while, and you can come in and get some good deals, you're going to set yourself up for pretty good success. What you probably saw and I saw in 2008, 2009, 2010, all of these, what you would say is super smart people, they sat on the sidelines and they tried to time. They tried to time the market, and they waited until 2013. When you look at the data, the institutional buyers waited until 2013 to start buying again. There was a lot of opportunity between 2008 and 2013. And if you were able to take advantage of that, you did very, very well.
Yeah, it was an incredible time. I wish I could go back. God,
we all do. A little time machine back, and the knowledge that you know now. But again, now take that knowledge that you know now and apply it to today, and make sure you don't make the same mistakes that maybe you made the last time, or were too cautious or whatever. You don't want to be aggressive. And I think you said it perfectly. Like, you've got to look at deals. You've got to be conservative. You've got to be smart. You got to buy deals that make sense today. You've got to make sure you're being cautious. You still want to be optimistic. You always have to be optimistic, but you want to be cautious about what you're doing. And if the deal doesn't pencil out today, be careful. That's a big red flag.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Bo Eckstein here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. Going back to when you transitioned from being a school teacher, so were you doing some flips as a school teacher, and then all of a sudden you're like, okay, I can do this full time, and you just went full time into real estate?
Yeah, exactly. So I actually owned, when I was still a teacher, I owned 5 rental properties. I had purchased 5 rental properties. I'd flipped a handful of houses, and I was continuing to flip, was continuing to buy rental properties, and finally I was done. It was actually, I was trying to convince my wife for quite a while, and we were at church, and the pastor was talking about, following your passion, taking risks, that type of stuff. And we get done with we get down there, we're driving home, and we're at a stoplight, and my wife and I had said nothing at that time. And it was just this kind of like, we knew, both of us were thinking the exact same thing. And she looks over at me, she goes, "You can quit your job. You're showing me the numbers." I was like, all right. So that was exactly it. Quit my job. It was such a great feeling, a little nerve-wracking at the time, right? Because I was giving up that income, but honestly, I was making $30,000 a year as a teacher. I don't know why I was nervous at all.
That's so crazy. That's like one deal for you. You know what I mean? One good flip. And that's what it's exactly, actually, I think what I showed her, I'm like, look at this flip that we did. We made like $36,000 on it. I was like, that's my salary. I mean, that's kind of like, I've never really had a job. I've always been self-employed, and I do lending for a living, and I have one other company, and I own some real estate. And I mean, I just always used to it, right? And then I see the people that are like W-2, and it's like, and gosh, school teachers don't get paid anything. It's so unfair. Like the one profession that really you look at like firefighters and cops, and they should be paid well too, but the difference between what they're getting paid versus the teachers is just insane. And the teachers are what bringing up the future of the world, right?
Yeah, so that's a whole different topic. It's definitely, I agree. I mean, especially the beginning teacher. I mean, how do you go to college for 4 years and get paid $30,000 when you get out? That just doesn't make any sense. Whatever. That, like you said, that's a big topic, but it's funny because even though I was only making $30,000 a year, it still is a little bit of golden handcuffs. Wasn't making gold, but I was making $30,000. We were doing we were doing fine with that. And it still was a little bit of that. I can't do this. This is a big risk,
But it sounded like you were pretty good with your money because
Yeah.
you were able to buy 5 rental. So you're pretty frugal.
We were and we still are super frugal.
Yeah. And now I think your wife probably looks back and goes, I'm so glad we made that decision, because it sounded like you're on your way to be financially free anyway. You would have been, but you, by going full time, like in the last 12, 13 years, you've amassed lots of wealth, lots of cash flow.
Hard to kind of look back and say, whoa, that's where I was and this is where I am. It's just crazy to look back and think like that, but it's a blessing, right? Every day is a blessing. So
is there any other asset classes that interest you, that you've looked into, and because I saw you guys got into the senior living, which I totally agree with, that this is a demographic that it's just ballooning, right? Every day there's so many people that are, and Americans don't typically take care of they take care of them financially, but they don't want them to live at the house, right? Like they want them to live down the street and they go visit them. Curious on any.
Look, I would consider us value add investors. So multifamily just happens to be a product that we really truly believe in and we think is going to be strong now and into the future. Senior housing, again, is a product I really believe in and think it's going to be strong into the future. It's actually weak right now, but I think it's going to be very strong into the future. But are there other product types? Absolutely. We're always kind of looking for the right opportunities. We bought a industrial office building last year. Right now we're looking at a retail, very good opportunity in a very strong submarket. And so, we're always looking at other opportunities. Can we partner with the right people? Do we have the right teams that we can put in place? I think those are the big questions when we look at a new asset class is, do we have the right teams in place, or are we able to get the right teams in place, the right management, or at least have the right partners to do maybe a JV if we're going to do something that's outside of our comfort zone. So the deal that we did that was an industrial/office, that was a partnership. We JV'd with another group and did a complete joint venture with them. And so that's how we're looking at this, new kind of retail shop too. It would be a JV with actually the same group, but an experienced group that has a lot of good track record with that type of product.
That makes sense. That's a good way of expanding without expanding too much and getting a team that's already doing it. So you don't have to create the wheel. What about, can you talk us about your podcast, Pillars of Wealth Creation? Tell us about the show, who you interview, what is the kind of topic around that?
Yeah, been doing it since 2017. We have well over 500 episodes now, so it's been a lot of fun. The type of people we interview, honestly, it's mostly real estate people, just because that's just who I am, a real estate guy. So it's mostly real estate people. But I'm trying to dive into more about how do you actually operate a business successfully versus a lot of what it came from is I would talk to all these people about real estate and they want to be successful and they want to find the next deal. And all they're focused on is the deal. They're not focused on building a business. They're not focused on creating an actual business that can sustain, and grow. They think that real estate, it's all about finding the next deal. And certainly you've got to have deals in order to grow a company, but you also have to know how to run a business. You also have to know how to put systems into place and be a leader, run teams, hire and fire and all that kind of stuff. So that's kind of the idea behind the podcast is how do you truly build wealth through a company. And we talk a lot about those details and, I talk with other various people that are outside of the industry as well, a lot of different business leaders. Yeah.
And what are you doing What do you do on an average day? Are you really into your workouts, your personal development? What does a day look like for you?
Man, I wish I could say it was this, and this. It changes so much throughout the day. But yeah, I try to, every morning I try to get up so kind of my morning routine is waking up. I'm not a 4 a.m. waker, but I wake up, I read a little bit in the Bible and read also into some sort of mindset book or whatever, some other kind of nonfiction book. And then I do a little bit of journaling and do a light workout every morning, mostly core, and then start my day. And my day can get a little crazy, but yeah, it's daytime, and I usually actually do a full workout mostly middle of the day. I like to break my day up. I can't sit still very long. So I like doing a workout at like noon. Go out, go for a run, lift weights, whatever it is, get that big sweat in, and then continue the workday. So
I like that. I got to start doing that. I work out in the morning, and then it's like I sit for the next 12 hours, and your back, even if you work out every day, you still have back problems if you sit all day. I think I like what you're doing, the light workout, and then lunchtime, go out, and then it gets you energized for like the next kind of. So you're actually like break up your day. It's almost like if you're really efficient, you're working almost 2 days for everybody's 1 day.
Yeah, it's just a reset, right? And like you said, you're just kind of sitting there for 12 hours, and you're just like, man, I need to stand up. I need to move around, and I do a lot. That's one thing I make sure during my day. Every hour I'm up, I walk around. Even then I'll just walk around. I'll maybe do some pull-ups, or I'll plank. Hold a plank for 30 seconds or 60 seconds, and just get my blood flowing again, and then go back to work. But in the morning, my light workout, honestly, it's plank, it's Superman's, it's some pull-ups, it's some push-ups, it's maybe some ab work, and that's it. It's not I really don't sweat. Like, I don't work so hard where I sweat. I just kind of get my core and my blood moving a little bit.
That's good. That's good. I like that. I'm gonna try that. That makes sense too. And then I go hit my heavy workout. They tell you actually that like between 11 and like 2:30 is when you're like, that's the best time to actually work out hard, because your body's woken up and stuff. So
well, there you go. I must be perfect case study.
you already know.
Yeah.
But thank you so much. Where's the best place for people to follow you? Podcast, or do you have your own personal website, or you just want them to go to your corporate website?
Yeah, so definitely podcast, Pillars of Wealth Creation, pillarsofwealthcreation.com. You can listen to anywhere you listen to podcasts. And then our website is enduruscapital.com. So it's endurus.capital.com. They can reach out to me there, or it's todd@enduruscapital.com.
And what does endurance mean? Is that kind of like endurance, but
endure? Yeah, we're going to endure through thick and thin. I mean, we've got a potential recession coming up here. Who knows what it's going to be like, but we've got a potential recession, and our company's going to endure through it, and we're going to grow stronger through it. So
I love it. Well, thank you for spending time with us. This was very valuable. It was great to hear your story from a school teacher to collectively having 4,000 units and growing, and just getting started really for you. So thank you. I'm going to dive into your podcast too. It's cool when I interview another podcaster, because then I'm like, okay, I'm going to listen to this person. I like this person and see what they're doing. So anyways, hope you guys enjoy this episode. We'll see you on the next episode. Thanks, everyone.
Thanks much.